Chillaware into the early afternoon on Wall Street, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to keep some clarity through the chaos of today's markets. The tone right now is a bit conflicted. Macro data still looks solid on paper, but the narrative around how that growth evolves into 2026 is getting more cautious, even as pockets of tech and A-linked names stay very much in play. Let's start with the big picture. According to reporting from MarketWatch, we just learned the U.S. economy posted its fastest growth in 2 years, with third-quarter GDP running at a 430% annual pace before the government shutdown hit. That's a robust headline, but the message from economists is, don't expect a repeat in the final stretch of 2025, as the shutdown and slower job creation start to bite. Layered on top of that, a separate MarketWatch piece points out a real disconnect. Americans say the economy feels lousy, but their spending habits still suggest underlying strength. Tariffs, inflation, and softer hiring are weighing on sentiment, even as consumption holds up. For markets, that tension keeps the debate alive over whether we're late-cycle resilience or just delaying a slowdown. On the upside, one clear corporate standout this hour is ServiceNow. MarketWatch is reporting that the company is buying cybersecurity firm Armis for $75 billion, betting big on security as the backbone of an AI control tower strategy. Traders are watching that as another confirmation of two ongoing themes: consolidation in cybersecurity, and the idea that AI winners will be those who can secure and orchestrate data, not just generate it. It's the kind of deal that can ripple across software and cyber names as investors reassess who's a buyer, who's a target, and who might get left behind. On the risk side, that strong but fading GDP story is the one to handle with care. If 430% growth was the high water mark, markets will be sensitive to any incoming data that confirm a slower trend from here, whether that's jobs, consumer confidence, or holiday spending updates. Late in the year, liquidity is thinner, so macro surprises can move prices more than usual. Now, a couple of under-the-radar stories that could matter more over time. MarketWatch is highlighting a notable shift in consumer behavior. Americans aren't drinking as much alcohol this holiday season, and some aren't drinking at all. One factor is the growing use of weight loss drugs. That's a longer-term theme, but professional investors will be thinking about how GLP-1 usage and broader health trends could reshape everything from beverage companies to restaurants and even insurers. Another sleeper theme: policy risk in clean energy. Reporting from MarketWatch says President Trump has paused offshore wind projects, and analysts warn that the halt could last weeks to months while it's fought out in the courts. Even if it's temporary, it refreshes concerns around the regulatory and permitting pipeline for large renewable projects. That doesn't just affect the developers. It can influence sentiment across equipment makers, utilities with big offshore exposure, and broader ESG strategies. Into the next hour, I'll be watching three things. First, how the ServiceNow Armis deal trades as investors digest the price tag and the AI cybersecurity angle. Second, any follow-through in rate-sensitive areas as traders reconcile that strong past GDP print with weaker expectations ahead. And third, whether these quieter consumer and policy stories, alcohol consumption trends and offshore wind delays, start to show up in sector-level moves, or stay more in the background for now. Remember, this is information and education, not personalized financial advice. As always, it'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,